All right, so in this part, we'll be talking about Fibonacci ratios, Fibonacci retracements, and how to apply this very powerful tool as an additional confluence to find high probability trades when trading with the trend, when we're buying on the uptrend, when we're selling on the downtrend, especially useful in the bounce strategy that you'll be learning in lesson 2, buying the bounce on the uptrend or the bounce on the downtrend. So first of all, a bit of history on how Fibonacci came about. Fibonacci is the name of a mathematician. And what he did one day was he came out with a string of numbers because he was pretty free. Right? And he came out with this thing called the Fibonacci number sequence. So how did he come out with this range of numbers? Basically what he did was he started with the usual 0 and 1. As you can see here, 0 and 1. And then he asked this question, what would happen if I add the current number to the preceding number, the number before this number? So he took 1 plus 0, and 1 plus 0 is 1, right? And he then takes 1 plus 1 is 2, and 2 plus 1 is 3, 3 plus 2 is 5, 5 plus 3 is 8, and so on and so forth. And that's how you get this string of Fibonacci numbers. Now, what's amazing about this sequence of numbers is, as you keep doing it, you come to a point of time when if you take any number, for example, if you take 144, and if you divide it by the next number, in this case 233, what do you get? If you take 144 and you divide that by 233, you will get a ratio which is 0.618, also known as 61.8%. Okay, and again, as long as you take any number and divide it by the number before it, you always get 0.618. And this is known as the golden ratio. Okay, as the golden ratio. And you may say, okay, so what's so special about this golden ratio 0.618? Well, here's the thing. It appears everywhere in nature, and it's fascinating, and it's miraculous. Okay, for example, here are a few examples of how it appears in nature. If you look at the human body, right, and if you were to take, for example, the height of an average person, right, so that's the total length of a person, and then you take the distance from your navel, your belly button, to, again, your feet. If you take this entire length of your whole body, divide by this length, guess what you get? You get approximately 0.618. There you go, right? If you take your arm, if you take the length of your arm, like so, that's the whole length of your arm, and you divide it from the distance between your fingers to your elbow, guess what you get? You get 0.618, okay? It's kind of, this ratio is inbuilt into nature. If you take the molecule of a person, the DNA molecule of a person, you take the length of the DNA molecule, it's 34 angstrom. Well, that's how they measure the length of a DNA molecule. Okay, I don't know what the heck it means. Sounds interesting. And if you divide the length of the DNA molecule with the width of the molecule, 34 divided by 21, guess what you get? You get 0.618. Ta-da! If you take a look at any tree in nature, or even a flower petal, the way the flowers are arranged, the way the tree branches grow, are in the Fibonacci sequence. For example, if you take a look at a tree, you notice that at first there's one trunk, right? There's one trunk, then it splits into two main branches, and then 3 branches, 5 branches, 8 branches, 13 branches, and it's the Fibonacci sequence. So again, if you take any number of branches and divide it by the previous number of branches, you get 0.618. It's really mind-blowing, right? So one day someone asked this question, if it appears in nature all the time, this 0.618 thing, does it appear in stock charts? And apparently it does. It does appear in stock charts. So how does it appear? It appears in the wave patterns of trends. So for example, if you take a look at an uptrend in a currency pair, for example, and I've mentioned this many times before, when the price is on an uptrend, it doesn't move up in a straight line. How does it move? It moves in a wave pattern, or like a breathing pattern. First, it moves up, then it comes down, moves up, comes down, moves up, comes down, and it continues in that pattern, right? So when the price moves up in this pattern, this is known as the impulsive wave. Okay, it's kind of like breathing out, okay? Now you can't breathe out forever, you're gonna lose your breath, right? So eventually after breathing out, the impulse wave has ended, it has to go through what we call a corrective wave. Or we also call this a retracement or pullback. After price has gone up too much, it has to rest and come back. So you breathe out, breathe in, and only after you breathe in can you then breathe out to the next impulsive wave, like so, all right? So one of the things you've learned in trading is you always want to trade with the trend. You only want to buy when the price is on a clear uptrend. So this is a very clear uptrend. Because on an uptrend, it makes higher highs and higher lows. Okay? Now the $1 million question is, when do you buy on the uptrend? And the best time to buy on the uptrend is right at the end of the corrective wave, right? That is exactly the point over here that you want to buy the stock or the Forex currency pair or the Bitcoin, whatever it is, right? So you want to buy exactly there just before it starts the next move up. And you could sell there to take profits, right? Then when it comes down again, the next corrective wave, you want to buy right at the end of the correction and ride it up again, okay? So again, the question is, how would you know where is the end of the correction? So there are many ways you can kind of like guess. Now, there's no guarantees, of course. It's a matter of probability. And you can't get it right all the time. You can get it right half the time or slightly more than half the time, you're making a lot of money. And that's all you need to do. So if you've watched my other videos, you learn that I look for an impulsive wave going up, corrective wave, okay? So again, how do I know that this is the end? It is the end of the corrective wave and it's going to move up. Okay, again, I don't know for sure, but how I find a high probability entry is I use the Fibonacci ratio. The Fibonacci ratio. So if you look at many uptrend wave patterns, you find that on a very clear uptrend, the price tends to retrace to a Fibonacci level of 0.618. And if it doesn't, it tends to retrace to at least a 0.5 level. Now, 0.5 is not really a Fibonacci level, but for some reason, prices tend to retrace to the 50% level. So what it means is this, okay? When you look at a wave pattern, always think in terms of A, B, C. So A is the start of the impulsive wave. B is the end of the impulsive wave. So A, B, and C is the end of the corrective wave. In other words, where we want to buy, right? Now, C should be at a 61.8% retracement level, okay, or at a 50% retracement level. If it is either a 61.8 or 50% level, there's a very high probability that if you buy there, you will experience the next upward wave pattern. All right? So if you think about the distance from A to B, if you can imagine that this is 100%, the distance of A to B is 100%. If it corrects, if it comes down by half, it is the 50% level. If it goes down slightly more than half, it should reach the 61.8% level. And that is the time we buy to catch the wave up. If it retraces to more than 61.8%, that tells you the uptrend may be broken and we do not take that trade. It is a risky trade to take. Got it? Okay, so let's take a look at some charts and some examples to understand this concept. All right, so we're looking at the Aussie dollar pair, and I'm looking at 15-minute candles. Now again, this works on any time frame, 15-minute candles, 1 hour daily, weekly candles. So I tend to trade Forex on the 15-minute candle, so I'm looking at this time frame. So if you take a look at this part of the chart, you can see it's on a pretty clear uptrend because it's making, as you can see, higher highs and higher lows, right? Higher highs and higher lows. So very clear uptrend. So question is, can you identify where's the ABC pattern? All right, take a minute, look at the chart and think, is there an A, B, C pattern, where A to B is the impulsive wave and B to C is the corrective wave, right? Take a look, see if you can find one. Have you found one? Okay, good. So there are actually two. One of them could be, you say, okay, this could be A, right? This is A. This is B, right? And this is C, right? You can see A to B to C. And then it continues, right? Now, you could have also spotted this one, right? A, that's A, that's B, oops, and that's C. A, B, C. Can you see that? All right, great. So let me put that in. Let me use the second one, right? So A, B, C. Okay. So the question is, at this point of time at C, okay, would you be confident to buy this currency pair at C, anticipating that the price would then start the impulsive wave? How would you know that C is the end of the correction? How would you know, right? So again, that's how we use Fibonacci retracements. So what we do is we use the Fibonacci tool on your charting software like MT4, and we'll see if C, ABC, happens to be a 50% or a 61.8% retracement level. All right, so let's take a look if it is a retracement level. So on your charting platform, MT4, using whatever broker you want, I use Halifax Brokers, click on this symbol. That is your Fibonacci tool. So once you got a Fibonacci tool, what you do is you take that tool and you click on A, which is over there. So you click on A and you drag it to B, okay, and you release the tool. And then you look at point C. And notice if point C is at the 61.8% or at the 50% level. If it is at one of these levels, it tells you there's a very high probability the corrective wave has ended and it's time to buy to ride the new impulsive wave up. So in this case, you can see that indeed C happens to be at the 50% level. Can you see that? So that would be an indication of us buying over here and catching the wave up. There you go. Now, we don't just use Fibonacci retracements by themselves. By themselves, they are not reliable enough. We must always combine them with some kind of candlestick pattern, moving average support, or a horizontal support level. And I'll talk more about that in the slides to follow. But let me now show you how I manipulate it on the charts right now. All right, so let's take a look at the charts right now. And again, I'm looking at the Aussie dollar pair, 15-minute candles. All right. So you can see over here, like I mentioned, we have got this uptrend pattern. And what we want to do is we want to identify the ABC wave pattern and see which of the C's are at retracement or are at Fibonacci retracement levels, right? Okay, so again, where's my ABC? Well, first, this could be my A, right? The start of the impulsive wave. This is my B. And where's my C? My C will be over here. That's my C, okay? So the question is this a Fibonacci level? Is it 50% or 61.8%? If it is, I have confidence it's a strong support, I'm gonna buy, okay? So to find out, what do? I go to this tool called the Fibonacci tool, click on that, right? Click on that, and I click on A, click there, okay? And you can see I can move it around, and I drag it to B, There we go. And release it, right? So click on A, drag to B, and what do you notice? You notice that miraculously, this C is at the 61.8% level. So this tells you that this retracement to C is exactly at the Fibonacci retracement level. So this will give me confidence to buy right at that point to catch the next impulsive wave up. Can you see that? Okay, great. So let's take a look at another example. So let me remove this one. Let me just delete that. Okay. Now the next one will be here. So again, it's A. Again, we had this A, we had this B, we had this C, right? We just did that. Now this is the new A. Right? This is the new A, this is the new B, and this is C. So again, A, B, C. So again, question, is this a Fibonacci level? Is this a 50% or is this a 61.8% level? If it is, then that would give me a strong indication that the correction has ended. So once again, what do? I click on my Fibonacci tool over there. I click on A, drag to B, release, and there you go. Exactly, C is at the 50% level. Can you see that? Exactly at the 50. Let me circle that 50% level. Okay. So again, this gives me confidence that I could buy at the end of the correction to catch the new trend up. Okay. So now, like I mentioned earlier on, okay, it is not reliable enough to just depend on the Fibonacci levels. What I'm going to do is I'm going to put in moving averages. Okay, and what do you notice? All right, so I've just put in the moving averages, and you can see, let me just zoom in over here. There we go. Okay, cool. And this was our Fibonacci that we saw, right? So this was A, B, C. Okay, recall that? This was the A, this was the B, and this was the C. So in this case, not only is it hitting the Fibonacci level of 50%, but it is also finding support at the 50 moving average. So it is what I call a double support of confluence. It is finding support at the Fibonacci level and at the moving average. So this gives me confidence to enter the trade with a buy over here in order to catch the wave up. Okay, so let me mention again, I do not rely only on Fibonacci. It must also coincide with a moving average support or a horizontal support level. Let's take a look at another example over here. Let me just remove that. Okay, how about this one? So again, do you identify A, B, and C, right? That's what we just drew earlier on. So once again, let's use the Fibonacci tool. Click A to B and C. So you can see this level is exactly at, let me just give you a second. Again, this is at the 50% level. 50% level, right? And again, it is finding support at the 50 moving average. So moving average support, Fibonacci support, high confluence buy area. And that's how we catch the next wave up. So now let's take a look at the downtrend. So for a downtrend, we see the wave pattern going down, right? So we've got an impulsive wave going down like that. And then we've got a corrective wave going up, impulsive wave going down, corrective wave going up, and the pattern continues, right? So again, breathe out, impulsive wave, breathe in, corrective wave, all right? So we want to know where is the end of the correction, so we enter there to sell, to short, and to capture the next impulsive wave down, and to take profits somewhere here. Take profits somewhere here, just before the next corrective wave goes up, all right? So again, how would we know that is the end of the correction? Again, we can't be sure for certain, but we use Fibonacci retracements to find the highest probability of the end of the correction. So we can sell right at the top of the correction. So again, we identify the pattern. A is the start of the impulsive wave. B is the end of the impulsive wave. So A to B is breathing out. Okay. B to C is breathing in. The start of the corrective wave is B. The end of the corrective wave is C. So A, B, C. Now, we want to ensure that C retraces to, again, the 50% or the 61.8% retracement level. So if you think of A to B, the distance from A to B, let's take it as 100%, like so. Then we want the corrective wave to retrace to 50% of that. Somewhere there would be 50%. And ideally, to retrace to 61.8%, which is the actual Fibonacci level. But if you retraces to more than 61.8%, it tells you that the downtrend wave could be broken, and it's a very risky trade to take. All right. So let's take a look at an example or on the charts right now. Okay, so we're looking at the dollar-franc pair. Again, 15-minute candles. They work on all time frames, and you can see that it's on a downtrend. Okay, so can you identify the ABC pattern? I've made it simple for you. I've actually drawn some lines in. Can you see? First of all, identify it's a downtrend because it makes lower lows and lower highs. So remember, a downtrend is defined as lower highs, and lower lows, right? So where's the ABC pattern? Can you see that? Right? All right, so that's the A. That's the start of the impulsive wave down, right? So A to B is breathing out, right? B to C is the corrective wave. So at this point, we want to sell right at that point, to short, to capture the profits as it goes down, and to take profits somewhere there before the next corrective wave. So again, how would you know that is the end of the corrective wave? Well, again, there's a high probability it's the end of the corrective wave if it retraces to, again, 50% or 61.8%. So is this the 61.8% or the 50% level? That's how we can use the Fibonacci tool to find out. All right, so A, B, C, okay? So again, click on the Fibonacci tool over there on your chart, MetaTrader 4, whatever charting software you're using, and you start by clicking on A. So you click on A, drag it to B, right? So B is there, and once you click on A, drag to B, release it, and take a look at C. Take a look at C. So is C at a Fibonacci level? And it happens that C is exactly at the 61.8% level. So this gives me confidence that this is a strong resistance. The correction has ended. I will sell there just before it collapses. All right, so let's take a look at the charts and see how I manipulate the charts to do that. All right, so we're back at the charts. I'm looking at dollar-franc, 15-minute candles. It's on a very clear downtrend, as you can see. Well, in fact, this, as you can see, was a bit of a consolidation pattern going sideways. This was a downtrend, and this is another downtrend. Okay, so can you spot an ABC pattern on the downtrend? Let me zoom in. First of all, let me put a marker. Place our marker over here, and let me just zoom in to that. Okay, there we go. Okay, so can you spot an ABC pattern? So again, where is A? A is always the start of the impulse. So this could be your A. Okay, that's your B. Okay, and where's your C? Your C would be there, right? So A, B, C. Okay, so would you be confident to sell here? Would you be confident that it has reached the end of the correction and is going to collapse? Okay, so to do that, we use our Fibonacci tool to see, is this a Fibonacci level? Yeah, so to do that, what do? Click on Fibonacci here, click on this tool, and we click on A, we drag to B, release, and lo and behold, can you see that this is exactly at the 61.8% level? Magical, isn't it? Okay, like magic, right? So once you see that, you know, hey, I'm pretty confident that this 61.8% is the end of the correction. So you would sell there and it's going to collapse, and then you take profit somewhere there. Okay. Now, like I mentioned earlier, I do not trade only using Fibonacci, right? I always want to ensure that the resistance at the Fibonacci level is also supported by a moving average. Okay, they'll be even better. So what I do is, let me put in the moving averages for you guys. So if I put in, for example, the 50 moving average, there we go. So you can see that not only this level here, oops, sorry. Okay, not only is this level here 61.8%, right? Not only is it a Fibonacci level, but it is at a moving average resistance. And you can see the moving average acts as a resistance, right? And it's finding resistance over here. It attempted to go above the moving average, but it closed back down again. And again, that gives me confidence to do a sell somewhere over there and capture the trade down. There we go. Okay. So again, at this juncture, I want you to just understand the concept of how I apply Fibonacci to find retracement points, the ABC point, and later on in the lesson 2, 3, and 4, when you learn the exact strategies on how to enter, how to exit, how to size your position, will you know exactly how to take the trade. Alright, so if you like this video, you can subscribe for more videos by clicking on the subscribe button. If you'd like to enroll in our professional Forex trading courses, you can go to piranhaprofits.com. For live training courses in Asia, do visit us at wealthacademyglobal.com. This is Adam Khoo, and may the markets be with you.